Good afternoon to all the students. Let us begin this wonderful chapter in AS-13, Investment Accounting. Let us start investment accounting. Yes, today I have a little cold, but don't worry, I will solve the questions correctly. Okay. Even if you give me wrong answers, I will be able to identify. Don't worry. So we will begin with our discussion on right share. Let us revise right share again. Let us revise right share again in case if you have some difficulty in understanding. With respect to right share, first check whether right shares are subscribed for or not. If right shares are subscribed, means the investor purchases the right share, the cost of right share will be added to the original carrying amount. Cost of right share will be added to original carrying amount. So you will simply pass the entry investment account debit to bank. If you come across this situation, investment account debit to bank. Suppose right is renounced without any consideration. Right is given to your friend but without consideration because it is your best friend. You are not charging him anything. Then no entry because there is no monetary consideration involved. But suppose the rights are sold. Check whether shares were acquired on come right basis. If the shares were acquired on come right basis, again check whether the market value of the share after their becoming X right is lower than the come right price. If the answer is yes, market value on their becoming X right is lower than the come right price, then apply the sale proceeds to reduce the carrying amount of investment to the market value. Entry here will be bank account debit to investment account. Now look at this next scenario. Shares are acquired on come right basis, but market price is higher on their becoming X right. After they become X right, the market price is higher. Then you will transfer the sale proceeds of rights to P&L account. The entry will be bank account debit to P&L account. Bank account debit to P&L account. And if shares are acquired on any other basis, then also the entry will be bank account debit to P&L account. Bank account debit to profit and loss account. So only in one scenario, the sale proceed will be transferred to investment account. Which is that scenario? Condition number one, shares must be purchased on come right basis, and condition number two, the market price on their becoming X right is lower. How will you calculate if the shares are on how will you calculate the average cost per share? How will you calculate the average cost per share? How will you calculate the average cost per share? So average cost per share will be calculated as follows. Average cost per share will be calculated as follows. So what we will do, for example, we will take cost of original holding, that is cost of shares that you have purchased. So first you will add cost of original holding, then you will add cost of right share. Cost of right shares, if right shares are subscribed. If right shares are subscribed. If right shares are subscribed, you will add. From that, you will deduct amount received on sale of right. Amount received on sale of right. Amount received on sale of right, but subject to two conditions being satisfied. Subject to two conditions being satisfied. First condition is that share must be acquired on come right basis. And second condition is that share price after their becoming X right is lower. If these two conditions are satisfied, sale proceeds of right will be credited to investment account, and therefore the investment cost will come down. Minus, one more minus, less dividend out of pre-acquisition profit. Less dividend out of pre-acquisition profit. This we have discussed in the earlier lecture. If any dividend is received out of pre-acquisition period profit, if any dividend is received out of pre-acquisition period profit, then in that case, the dividend will be credited to investment account. So that will reduce the cost of the investment. So cost of the investment will increase when right shares are purchased. Cost of investment will decrease when rights are sold, but subject to two conditions. Cost of investment will decrease when dividend is received out of pre-acquisition profit. So this will give you net cost. So the numerator of this formula, the numerator of the formula will be calculated by preparing a small working note like this. All cost of share you will add, rights sold deduct, dividend out of pre-acquisition deduct. This will give me numerator of the formula, and then divide by original holding, original number of share, plus right holding, that is right shares which are subscribed, that is right shares which are subscribed. This will give me average cost per share. Sometime there can be good luck of the investor, he has received the bonus shares also. He has received the bonus shares also. He has received right share. He has also received bonus share. Cost of bonus share is 0. What is the cost of bonus share? Cost of bonus share is 0. So your numerator will not change, because cost of bonus share will not increase your cost of investment. But in denominator you have to also add bonus shares. In the denominator you have to add bonus shares also. So this is a very important formula for this chapter for the remaining questions, because institute have continuously asked question after question on this topic, and most of these questions which are based on share will require this formula. So I will just revise one last time. What the student has to do, first he has to find out cost. For that, you will take original holding cost, plus you will add cost of right shares, that is right holding, minus sale proceeds of right, minus sale proceeds of rights, if two conditions are satisfied, if two conditions are satisfied, minus dividend received out of pre-acquisition profit, then you will take a total that will give you net cost of investment and divide by number of shares. Number of share will consist of three items: your original shares purchased from the market, right shares purchased from the company, and plus bonus shares, number of bonus shares received. So this will give you number. Amount divided by numbers will give you average cost per share. Will give you average cost per share. Same thing is written here in the numerator and the same thing is written here in the denominator. Either you can write the formula and solve, or you can prepare a statement and solve. Both are acceptable. Both are acceptable. Yes or no? Say yes. Louder. Yes, both are acceptable. So this was about right shares. We invested lot of time in right share. Let us see whether students have understood or not. After a few minutes, we will solve question answer on shares. Now the last few lines of this standard is disposal of investment. What is the meaning of disposal? Disposal means sale of investment. When the investment will be sold, the difference between the carrying amount and the net disposal proceed should be charged if loss or credited if profit to the P&L account. In simple words, profit and loss on sale is transferred to P&L account. Already we have solved questions on debenture. Do you remember? We have already solved 8 or 9 questions where we have transferred the profit or loss on sale of debenture to P&L account. That is the meaning of this paragraph. Then what is the great thing about this paragraph? It is trying to say do not transfer to any other reserve. What this statement tries to say, do not transfer to any other reserve. Okay? Do not transfer to any other reserve. Maybe in your 10 standard, 12 standard accounts, they might have told you, I don't know, that you will transfer the profit to capital reserve. Those happy days are over. Under AS-13, all profits and loss will be transferred to P&L account only. All profit and loss will be transferred to profit and loss account only. Coming to the next paragraph, reclassification. Reclassification from long-term investment to current investment. Reclassification means earlier it was long-term investment. Now you want to reclassify it to current investment. Can you do it? Can you do it? No. That is your standard. Institute says yes, you can do it. That is your business. You know your business better. So earlier the plan was to invest in long term. Earlier the plan was to invest for long term. That was your original intention. Remember, we started with this definition of current investment. A current investment is an investment which is readily realizable and the intention is to hold for not more than 12 months. Earlier your intention was to hold for more than 12 months. When you purchase the share, your intention was to hold for more than 12 months. Now the intention has changed. Now the intention has changed. So what is the intention now? Intention is to hold for less than 12 months. Oh my God. So that is called current investment. So now it will be classified as current investment. Suppose you had purchased shares of, you have purchased shares of, let us say, Idea, Vodafone Idea Limited. You had earlier purchased shares of Vodafone Idea Limited, okay? And your intention was that we will hold it for a longer term. But now your idea has changed. About Vodafone Idea, your idea has changed now. And what is your intention? Sell it and recover my money within 12 months. Yes or no? So investment which was earlier classified as long-term investment will now get classified as current investment. So what will you do? You are an accountant. You are an accountant. So the standard says it will be transferred at lower of the cost, lower of the cost and carrying amount, that is book value, at the date of transfer. You will transfer at lower of the two. What is lower of the two? Cost or carrying amount. If cost is 100 but its carrying amount is 90, you will transfer it to current investment at 90 rupees. Is it right? So lower of the two you will take. If cost is 100, carrying amount is also 100, then doesn't matter. You will transfer it at 100. The idea is that you will not be able to make profit when you transfer from one category to another category. That was about long-term investment to current investment. Now, the next issue is reclassification from current investment to long-term investment. Reclassification from current investment to long-term investment. Reclassification from current investment to long-term investment. Possible or not? Possible or not? Not possible. Again, not possible. How come you are such a negative thinker? How come you are such a negative thinker? You are saying no. The answer is yes. Suppose you have invested in shares of Zomato Limited for short term. You have invested in shares of Zomato Limited for short term. Current investment. You thought that, oh, we will just hold for some time and then we'll sell. But Zomato has become a big company after 12 months. Now this is Zomato. So what is your intention now? Your intention is to hold it for a longer term. So intention can change. Intention can change. And now you want to hold it for long term. Can I reclassify from current investment to long term investment? Can I reclassify from current investment to long term? Yes, you will think that let me continue to hold it for a longer term. My intention has changed. Is it right? Like a student, his intention also keeps changing. First he plans for two groups. First he plans for two groups, intention. After 6 months, intention changes to one group. After another 2 months, Intention changes to next exam only. Okay, intention changes. I hope now the example is clear. How the intention can change. What is your intention? 2 months or two group or one group? Two group. Okay. After 6 months, I will ask you the same question. And then again, I will see how much intention you carry. So just like your intention changed, investor intention can also change. The standard says, as a standard setting body, I cannot stop you from changing your intention. I can't interfere in your business decision, but I can formulate accounting rules. Okay. So what is the rule for reclassification? If you are changing from CI to LTI, CI to LTI, it will be at lower of cost or fair value. Lower of cost or fair value. If fair value has gone down, take fair value. Otherwise, take cost. So the idea is that you can't make profit when you transfer. You can't make profit when you transfer. Is it right? Otherwise, just to make profit in the books, you will reclassify investment from long term to current or current to long term. So we will take lower of the two. So just I will summarize. If you are transferring from long term to current investment, it is lower of cost or carrying amount. Carrying amount means book value. If you are transferring from current investment to long term investment, it will be lower of cost or fair value. It will be lower of cost or fair value. So next question, very important for exam purpose, 4 marks. Similar question was asked in the exam ranging from 4 to 5 marks. Okay. So please come to question number 16 printed below. Question number 16 printed below. This is the question printed in your notes, question number 16. ASF Limited wants to reclassify its investment in accordance with AS-13. Decide on the amount of transfer based on the following information. First question, a portion of current investment purchased for 20 lakh is to be reclassified as long-term investment. Cost is 20 lakh. As the company has decided to retain them, the market value on the date of balance sheet is 25 lakh. Fair value is 25 lakh. Fair value is 25 lakh. And you want to transfer from current investment to long-term investment. At what amount it will be transferred? At what amount it will be transferred? Student will answer 20 or 25. Lower of cost and fair value. The answer is 20 lakhs. The answer is 20 lakh, lower of the two. Lower of the two. Okay. Question number 2. Another portion of current investment is purchased for 15 lakh. Cost is 15 lakh, underline, and it is to be reclassified as long-term investment. Again, current investment is getting reclassified to long-term investment. The market value is 6.5 lakh. Fair value is 6.5 lakh. So at what amount it will be reclassified? Answer. Answer. The answer is lower of the two. 6.5 lakh. 6.5 lakh. It will be reclassified at 6.5 lakh, but you have purchased it at a cost of 15 lakh. You have purchased it at a cost of 15 lakh. So 15 lakh minus 6.5 lakh, how much is that? 8.5 lakh loss. 8.5 lakh loss will be transferred to P&L account because you purchased for 15, transferring to long term investment at 8.5, sorry 6.5. So 8.5 will be transferred to P&L account. So most of the students have given the correct answer 6.5 lakh and loss will be 8.5 lakh. Next question, third part. Part 3. Certain long term investment. This time it is long term investment to current investment. What is original classification? Long term. No longer considered for holding purpose. To be reclassified as current investment. The original cost was 18 lakh. Cost is 18 lakh, but it has been written down to rupees 12 lakh to recognize permanent decline. But its carrying amount is 12 lakh. So what is the amount of transfer? At what amount this third investment will be transferred from long term to current investment? So the answer is lower of the two, 12 lakh. The answer is 12 lakh. Will you recognize any loss? In third example, will you recognize any loss? Question mark, question mark. Will you recognize any loss? How much? 6 lakh. One student is saying we will recognize 6 lakh. But the answer is no. Its carrying amount is already 12 lakh. What is carrying amount? Book value. 6 lakh rupees loss was already provided in the previous year. That is why its carrying amount has reduced from 18 lakh to 12 lakh. Oh, 6 lakh rupees loss was already provided in the previous year. So last year you have already provided. Will you provide again? No. So the answer is we will not recognize any loss. The loss was already recognized in the previous year. The loss was already written down in the previous year. So Sanket Jain is right. So please write down the answer. I will dictate the answer one by one. Dear student, write the answer. Come on. In your notebook, question number 16. Question number 16, part 1. Question 16, part 1, write down. The current investment will be reclassified to long term investment. The current investment will be reclassified to long term investment at lower of the two, 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 that is 20 lakh, that is rupees 20 lakh, that is rupees 20 lakh. the current investment will be reclassified to long-term investment at lower of the two, that is rupees 20 lakh. Now write down answer 16 part 2. Answer 16 part 2. The current investment will be reclassified. The current investment will be reclassified to long-term investment, to long-term investment at lower of the two, at lower of the two, that is rupees 6.5 lakh. That is rupees 6.5 lakhs. That is rupees 6.5 lakh. Next line, next sentence, the loss of rupees, the loss of rupees, the loss of rupees 8.5 lakhs, the loss of rupees 8.5 lakhs will be charged to, the loss of rupees 8.5 lakh will be charged to profit and loss account. The loss of rupees 8.5 lakhs will be charged to profit and loss account. Then write down answer 16 part 3. Answer 16 part 3. The long-term investment, the long-term investment will be reclassified to, will be reclassified to current investment, will be reclassified to current investment at lower of, at lower of, at lower of cost and carrying amount, at lower of cost and carrying amount, that is rupees 12 lakhs. That is rupees 12 lakhs. That is rupees 12 lakhs. Next sentence, the loss of rupees 6 lakh, the loss of rupees 6 lakhs has already been recognized, the loss of rupees 6 lakhs has already been recognized in previous year. The loss of rupees 6 lakhs has already been recognized in previous year. It won't be recognized again. It won't be recognized again in current year. It won't be recognized again in the current year. It won't be recognized again in the current year. So this question is very important. Similar questions have been asked in the exam for 4 to 5 marks compulsory question. Now the last part of the standard is disclosure requirement. Disclosure means information relating to investment should be disclosed in the financial statement. Financial statement means balance sheet, profit and loss, cash flow statement, notes to account. Is it right? So these are the disclosure related to investment. Come on, just read it quickly, not very important. You have to remember these disclosures. So one disclosure is disclosure about accounting policy for determination of carrying amount of investment. Accounting policy for determination of carrying amount of investment, paragraph 21, paragraph 21. Then whatever accounting policy you are following, disclose it. Second disclosure is the enterprise should disclose current investment and long-term investment distinctly in the financial statement. Distinctly means separately. Distinctly means separately. Company should separately show investment in long term investment and investment in current investment. Then you have to give the further classification of current and long term investment. So some companies will invest in government and trust securities, shares, debentures, bond, investment property and any other investment. So investment will be further bifurcated into these headings. Whether you invested in government security, trust securities, that means safe investments. These are safe investments which has no risk. Then investment in share bond, etc. Next disclosure is amount included in P&L account. How much you have recognized income in P&L account. So what are the types of income you have to recognize? Interest income, dividend income, showing separately dividend from subsidiary company. Dividend from subsidiary shown separately. What is subsidiary? What is subsidiary? What is a subsidiary company? Any idea? What is a subsidiary company? Yes. Suppose A Limited holds more than 50% shares of B. B is a subsidiary of A. B is a subsidiary of A. That means you are basically controlling that company. You are holding more than 50% share in that company. That company is called subsidiary company. Dividend from subsidiary company will be shown separately. Income from rental on investment is shown separately. So interest you have to show, dividend you have to show, rent income you have to show. Such income from long term and current investment. This will be further bifurcated into income from current investment or income from long term investment. This way, ideally, we should disclose income from investment in the profit and loss account. Gross income should be stated. Amount of income tax deducted at source will be included under advance tax paid. Oh my God. Nowadays, if you receive interest from bank or interest on debenture, deposit, then what happens? Those company don't pay you full amount. Suppose interest is to be paid 10 lakh rupees. They will not pay you 10 lakh. They will deduct TDS. What is full form of TDS? Tax deducted at source. So as per Income Tax Act, the rate is 10%. So they will deduct 1 lakh. They will transfer 9 lakh rupees to you in your bank account. And this 1 lakh is treated as advance tax paid to the government. This 1 lakh TDS is called advance tax paid to the government. So what is the treatment in the books of account? In the books of account, the treatment would be like this. Bank account debit 9 lakh, TDS or advance tax debit 1 lakh to investment income 10 lakh. This 10 lakh will go to P&L account. This advance tax will go to balance sheet. And this 9 lakh goes to your bank account. So this will be the presentation. Nowadays government has asked all companies who are paying interest that you must deduct TDS, tax deducted at source. Next disclosure is profit and loss on sale of current investment, and change in the carrying amount of such investment. So any profit or loss on sale of current investment will be shown. Any profit or loss due to change in the current investment value will be shown, because current investments are valued at cost or fair value, whichever is lower. Whichever is lower. So if the fair value goes down, you will reduce the carrying amount. That will be disclosed. Then you have to disclose profit and loss on same thing, only this time it is for long term investment, and any change in the carrying amount of such investment. Second last disclosure, significant restriction on the right of ownership. If there are any restriction, if there are any restriction on being owner of a share, like for example, restriction on transfer. Some companies put a restriction on their investor that it cannot be transferred for some years. Is it right? That has to be disclosed. Then any restriction on realizability of investment. Realizability means on sale. There can be restriction on sale. That means suppose you have made investment was made in one Afghani company. Which company? Afghani company. Where is Afghani company located? Afghanistan. Afghani company, Afghanistan. Now you want to sell that investment, but Taliban says you can't sell it now. You want to sell, but you can't sell. So there is a restriction on realizability. There is no restriction on Taliban. Restriction is on sale of investment. Your money gets blocked. Okay, so that you have to disclose. You just have to disclose that our investment has got blocked and we can't sell it. Last disclosure, aggregate amount of quoted and unquoted invested. Quoted means which are listed, okay, on exchange. So you have to divide your investment into two categories, quoted, unquoted. Quoted means which are listed on exchange. What is the market value of those investments which are listed on stock exchange, and what is the market value or value of those investments which are unquoted, which are not listed? Giving the market value of quoted investment. For quoted investment, give the market value, because market value is available. They are quoted on the stock exchange. So with this, we will come to an end of the disclosure requirement. Theory part of this chapter is over. Now we'll solve few questions on shares. Okay, today we will try to take some question on shares. This will give you a very good practice, and as I always request, please try to solve all questions today after the class. All question must be solved by you today after the class. Because of limited time in the classroom, we can solve limited number of questions only, but you can solve more and more questions from your study material, other reference books, okay, etc. So here comes our next question, which I am going to ask you to write down. So dear student, please write down one question for me. See the significance of this question. This is May 18 exam, 10 marks, exam question, your exam question only, and then October 2020 MTP for 10 marks. So are you ready for this wonderful question? Say yes. So please come to one question. I will dictate. Mr. Vijay entered into, write down the question, Mr. Vijay entered into, Mr. Vijay entered into following transactions for purchase and sale of, for purchase and sale of equity shares of, for purchase and sale of equity shares of JP Power Limited, purchase and sale of JP Power Limited. The shares have paid a value of rupees 10 per share. The shares have paid a value of rupees 10 per share. 3 columns you will draw: date, number of shares, and terms. Date, number of shares, and terms. Date, number of shares, and terms. 3 columns you will draw. Very, very important question. Date column, write down 1/1/2016, 15th March 2016, 20th May 2016, 25th July 2016, 20th December 2016, 1st February 2017. Number of shares column, write down. Number of shares column 600, 900, 1000, 2500, 1500, 1000. Terms, write down. Buy at rupees 20 per share. Second line, buy at rupees 25 per share. Keep writing fast. Buy at rupees 23 per share. Then write bonus shares received. Bonus shares received. Sell at rupees 22 per share. Sell at rupees 22 per share. Sell at rupees, last one is 24 per share. And then there are additional information. First point, additional information. On 15th September, on 15th September 2016, on 15th September 2016, dividend at the rate of rupees 3 per share, dividend at the rate of rupees 3 per share was received for the year ended, for the year ended 31st March 2016, for the year ended 31st March 2016. Second point, right. On 12th November 2016, on 12th November 2016, company made a right issue, company made a right issue of equity share in the ratio of equity share in the ratio of 1 share for 5 shares held, 1 share for 5 shares held on payment of rupees 20 per share. On payment of rupees 20 per share, he subscribed to he subscribed to 60% of the shares. He subscribed to 60% of the shares and renounced the remaining shares on receipt of the premium of rupees 3 per share. Third point, right? Shares are to be valued on weighted average cost basis. Shares are to be valued on weighted average cost basis. You are required to prepare investment account. You are required to prepare investment account you are required to prepare investment account for the year ended 31st March 2017 and 31st March 2016. 2 years investment account you have to prepare. You have to prepare investment account for 2 years. So you see in this problem, this first two transactions will take place in the first financial year, that is 16-17, and the remaining transactions will take place in second financial year, that is 16-17. Is it right? So these two entries will come for year ended 31st March 16. These entries will come in year ended 31st March 17. Plus there is one more transaction here. There are two more transactions. On 15 September, dividend will be received. Correct? And on 12th November 16, right issue was made by the company. Mr. Vijay only subscribed 60% of the right issue. What he did with the remaining 40%? Remaining 40% he renounced. At what rate? At rupees 3 per share. Remaining he renounced at rupees 3 per share. Okay. So before we prepare the investment account format, I would first like to prepare some working notes. Is it right? But first what you do, as we do always, we draw the investment account format. So all of you are solving one of the most important questions of this topic. Write down format, books of Mr. Vijay. Format, once ready, we can do first. Similar to debenture, but we are not going to write interest now, because on shares we don't get interest. Investment account for the period from, now this time there are 2 years involved, no problem. You can say 1/4. What was the date of purchase? 1st January 16. First time he purchased on 1/1/16. There is no opening balance, and we have to go up to 31st March 17. We have to go up to 31st March 17. And what is this security? This security is shares of JP Power, JP Power Limited, shares of JP Power Limited. We will not write interest due dates now, not required. And face value is given in the question rupees 10 per share. Rupees 10 per share. If you want to write all these details, you can. This will improve the quality of your answer. If you don't have time, then directly write down investment in shares account. Draw the 10 column format. To save time, I have removed one column, face value column. So on the debit side, 5 columns, date, particular, number, amount, income. And on the credit side, 5 columns, date, particular, number, amount, income. Draw about 25 lines. Draw about 25 lines. Take a scale. Draw the lines. Once you have completed the format, tell me. Is the format ready? Draw. Without format, how do I write? Yes or no? Without building, how will you do painting? So first I have to make the outer wall ready. So Dhruv is ready, Jayashri is ready, Kirti is ready, Thanga Lakshmi, Shurya, Sakshi Gade, everybody has done. So now we are ready to prepare some working notes. One student had asked me, is working note required? Without working note, how do I solve? Tell me. So there is no shortcut involved. The student expecting shortcut, you will have a disappointment. First of all, it is a difficult question for a normal person. So I can't use shortcut. If you want shortcut, you can do yourself. So I'll prepare working note 1. Right. Working note 1. Right entitlements. Right entitlements I need to prepare. That was not given in the table. Table only gives you buy, bonus share and then sale. So dear student, right hand side, write down amount. You have to pay attention to understand what is happening. I'm going to ask you a question now. Number of shares held before right issue. Number of shares held before right issue. So read the question and guess how many shares were held before the right issue. How many shares were held before the right issue? So on the screen the question. You have right issue on 12th November. Is it right? 12th November. Before 12th November you have 600 share, this 900 share, this 1000 share and this 2500 also. Yes or no? But not the last two. The last two were sold after that. But bonus share was received before that. So later on bonus share also you will be getting the right share. Don't worry. So you will add this 600, 900, 1000 and 2500. So the answer is 5000. Number of shares held before right issue 5000. Today you will remember. After 6 months you will not remember. So you write down 600 plus 900 plus 1000 and plus 2500. Then point number B, right issue ratio. Right issue ratio. What is the ratio? One share for every 5 share held. So we will call it 1:5. Point C, number of rights received. Number of rights received, it will be 1 by 5 into 5000. 1 by 5 into 5000 is 1000. Point number D, number of right shares purchased. Number of right shares purchased. So you have been given in the question 1000 into 60% rights were exercised. Can you look at the adjustment number 2? 60% of the share was subscribed. So right shares, 600 right shares were acquired. Point D, amount paid. Amount paid for buying 600 right shares. Amount paid for buying 600 right share. So 600 into 20 rupees. Read the adjustment number 2 again. 20 rupees per share. It's written there. 20 rupees per share was paid. So that is 12,000 rupees. Point number F, write down. Number of rights sold. Number of rights sold will be 1000 into 40%. 400. Point number G, sale proceeds of 400 rights at the rate of rupees 3 per share. At the rate of rupees 3 per share. At the rate of rupees 3 per share. So that comes to 400 into 3, 1200 rupees. 400 into 3, 1200 rupees. So what are the entries we are going to pass for this? We are going to pass 2 journal entries for these 2 transactions. One entry will be, which I am going to put it in the account later, investment account debit 12,000 to bank account 12,000. This is for purchase of right shares. This is for purchase of right shares. And second entry I will pass is bank account debit 1200 to dash. Now the student will answer bank account debit 1200 sale of right. Credit will be given to which account? Will the credit be given to investment account or P&L account? Will the credit be given to investment account or profit and loss account? Profit and loss account, not investment account. Why not investment account? Why not investment account? Why not investment account? It is going to be transferred to P&L account. You are right, but you are not able to give justification. The reason is there is a condition for transferring to investment account. That condition is that shares must be acquired on come right basis and market price should become lower. We are not given what was the X right price. Are you given what was the X right price on 12th of November? The answer is no. So note, sale proceeds of right has been transferred to, write in good handwriting, has been transferred to P&L account because information about X right price is not given because information about X right price is not given. Also, shares are not purchased on come right basis. Shares are not purchased on come right basis. If you write this, it will help you in the exam. It will help you in revision also. So this is my discussion on right. Only right adjustment itself comes for 2 to 4 marks separate question. Has everybody noted this? Then I have to go to next working note. Is it right? Then I have to go to next working note. Has everybody done? Yes. Now working note 2 is on dividend received. Dividend received. What is the dividend date? 15 September 2016. 15 September 2016. Total dividend received. And this I have to divide into two parts. Dividend received out of pre-acquisition profit, and second, dividend received out of post. Keep writing. First you write down the format, then I'm going to ask you 3 questions. You have to participate. Okay, working note 2 is dividend received on 15 September 2016. So my 3 questions to all this batch of highly talented student is, first question is, how much dividend total was received on 15 September? Give me total figure. Out of that, how much is dividend out of pre-acquisition? Give me this figure. And how much is dividend out of post-acquisition figure? Give me this figure. So let us call it A, B, C. So today your entire intelligence will be tested in full public view. The whole country is watching you. Show the intelligence. How much is the total dividend received? How much dividend is received out of pre-acquisition profit? How much dividend is received out of post-acquisition profit? Let the world see your intelligence. Time allowed 30 seconds. Yes, try. You can also try. You also have the question book in front of you. Don't read the answer. Just try yourself. So I have started getting answers. Somebody said 7500, 3000, 4500, 7500, 3500, 4000. So multiple student, multiple answer. Total 7500. 1 person is saying whole is pre-acquisition, 15,000. Oh my God. Very good. Some of you are right. Some of you are genuinely right. But many others have not given me the breakup of pre and post acquisition. Many students have not given me the breakup of pre and post acquisition. Okay. So let me try. What happened to most of the students who usually answer? Where are they right now? When is the dividend received? The dividend is received on 15 September. The dividend is received on 15 September at rupees 3 per share. At rupees 3 per share. But dividend relates to which year? On the screen, look at the question. Dividend per share was received for the year ended 31st March 2016. So first thing we have to note, this dividend was announced in the annual general meeting and the dividend relates to previous year ended 31st March 16. Okay. On which shares dividend will be paid by the company? Those shares which have been issued on 31st March 16. Those shares which were issued after 31st March 16, dividend will not be paid on those shares. Correct? Yes or no? Louder. Yes. If the shares were issued in the current year, like this bonus share was issued on 25th July. This is the share issued in current year. Bonus share were not outstanding in the previous year. Bonus share was not outstanding in the previous year. So on bonus share, dividend will not be paid. Dividend will not be paid. I will write neatly. Dividend will not be paid. And these are sale entries, so sale forget. What about right share? Right issue was also made in current year. So no dividend paid on right share also. No dividend will be paid on right share also because right share was not issued by 31st March 16. So dividend will be paid only on these three shares. dividend will be received on these three shares only. Dividend will be received on these three shares only. So that is 600, 900, 1000. 600 into 3, 900 into 3, and 1000 into 3. So the investor will receive dividend 1800, 2700, and 3000. Forget the rest. Dividend will be received only on those shares which exist in the books of the company on 31st March 16. Shares which were issued after 31st March 16, dividend will not be paid by the company. If dividend will not be paid by the company, investor will not receive the dividend. Bolo yes, yes. Now, so one thing we have solved, one puzzle we have solved. How much is total dividend received? The total dividend received was, fill in the blanks here. The total dividend received was 900 plus 600 plus 1000. So how much is that? 1500, 2500 shares into 3, 7500. So some student got 7500 right before I started solving. How much is the dividend out of pre-acquisition profit? Now this puzzle we have to solve. This investor, Mr. Vijay, purchased the share, this share, 1000 share. When did he purchase? Current year. These 1000 shares were purchased in current year. Correct? What is my current year? 2016-17. So I will draw one line, big line first. This is my previous year and these are my current year. Current year 2016-17, Vijay purchased shares. Vijay purchased 1000 shares and on these 1000 shares also he received the dividend. But dividend relates to which year? Dividend relates to previous year. Dividend relates to previous year but received in the current year by Vijay because Vijay is the shareholder of the company when the dividend was declared. He was not a shareholder on 31st March 16, but he is a shareholder on the date of declaration of dividend. So Vijay will receive dividend for a period for which he was not a shareholder. So dividend received on 1000 shares at the rate of rupees 3 is dividend out of pre-acquisition profit. And the next answer, what is the dividend out of post-acquisition profit? Balancing figure 7500 minus 3000, 4500. I have explained this yesterday also for half an hour. Today also I took almost same time. Is it right? Journal entry. I hope you are writing down. This is not an ashram where you will come and do meditation and go home. This is a classroom. So you have to write for future reference. Here the entry will be bank account debit 3000 to investment account 3000. I am explaining with the help of entry also. It is like recovery of cost. It is like recovery of cost. And here the journal entry will be for dividend out of post acquisition profit. bank account debit 4,500 to dividend income bracket P&L account 4,500 bracket P&L account. So that will be transferred to P&L account. Now most of you got it right. Note, dividend will not be received. Dividend will not be received on bonus shares and right shares because these shares did not exist. These shares did not exist on 31st March 2016 because these shares did not exist on 31st March 16. Once again, dividend will not be received on bonus share and right share because these shares did not exist on this planet Earth on 31st March 2016. Okay. And company is paying dividend for year ended 31st March 16. So they will see on 31st March 16 which shares were outstanding, and on those shares they will pay dividend. On those shares they will pay dividend. Is it right now? Say yes or no. Yes. One more working note. Working note 3. Average cost per share. Average cost per share. Working note 3. Average cost per share. Average cost per share. To help you to understand average cost per share, first I will take you to this question. You have purchased 600 share at 20, 900 at 25, 23 at 1000 at 23, bonus share at zero cost. And these two are sale transaction. We don't consider sale transaction. And below, don't forget, you have purchased some right share also. You have purchased 600 right share also at 20 rupees. 600 right share at 20, 12,000. And your sales were made after the right issue. Can you see the date? First you have only done purchase, bonus, one more purchase here. Sale took place after all purchases were made, correct? So can I directly calculate the average cost after the right issues were purchased? Because in between there is no sale. In between there is no sale. So whether you calculate average cost 5 times or 1 time, you are going to apply the same average cost for sale and closing balance. Only if there is a sale happening in between, then I need to recalculate the average cost. If the sale is not happening in between, then in that case, you can directly calculate the average cost. One student is saying, I am not able to understand, but which part you are not able to understand? Should I start again, Mr. Vijay? Entered into following transaction? Here, which part? So, Mr. Jogu Ishwar, first of all, your name is Ishwar, and you are saying, I am not able to understand. I am not unable to understand, how Ishwar cannot understand? If Ishwar can't understand, what human being will understand? Yes or no? Yes. So anyway, my first question to the person who has asked the query, are you present from the beginning of this chapter till now or not? If your answer is no, then it is difficult to understand at this point now, because already we have spent 6.5 hours on this topic, so it is difficult to understand. Okay. Another student is asking a query, share purchased on 20th May will not be counted. How can we pay dividend? Share purchased on 20th May will not be counted. Who said? These shares were in existence in the books of the company. You have purchased later, and I spent half an hour and I think you have not understood. Dividend is not paid to the person whose name appears in the books on 31st March. Dividend is paid to the person whose name will appear on the record date. Whose name will appear on the record date? Vijay's name will appear on the record date. So Vijay is entitled to dividend. These 1,000 shares were held by some other investor. You have purchased from him, but these 1,000 shares did exist in the books of the company. Okay. Okay, so Jogu Ishwar is accepting that he was absent for 2 days. Oh, now you can't understand, Jogu. It is too late now. Okay. You think this topic is a joke? If you think yes, you are right. It is a joke only. After the exam, you will realize it was a joke of institute on you. Okay. We are putting so much of hard work, and you are saying I was absent for 2 days. How irresponsible behavior. Very good. So now let us solve. First write down point A, total cost. Total cost. So today let us complete this chapter. Start with a new chapter, you will understand. Those who have been absent, write down first 600 shares at the rate of rupees 20. Quickly answer. Take your calculator. Answer 12,000. Then 900 shares at the rate of 25. That is your 900 into 25 is how much? 22,500. Take your calculator. Answer. Third answer, 1,000 shares. 1,000 shares at rupees 23 is 23,000. Then bonus share, write nil, because cost of bonus share is nil. Don't multiply by anything. You can just say 2,500 into rupees 0, because cost of bonus share is nil. And there is a right share also. There is right share also. If you go to your working note 1, 600 right shares were purchased for 20 rupees. That is 12,000. That is 12,000. Please be present every day. Then you will understand. Then you will understand the comprehensiveness of the lecture. In bits and pieces, it is difficult to understand. Now please tell me the total of this entire thing. 12,000 plus 22,500 plus 23,000 plus 0 plus 12,000. So this comes to 40, 50, 60, 69,500. 69,500 is right. And then you write down here less. Pre-acquisition dividend. Some students say it takes a lot of time, but it is a time consuming question. Less pre-acquisition dividend, working note 2, 3000 rupees. On the screen, just check it. This is the 3000 we are talking about. You have credited the investment, so cost of investment will reduce. Cost of investment will reduce. When you will credit the investment cost will go down. So 3000. So this is my net cost. Net cost is 66,500. Very good. Point B, number of shares. So number of shares will be, you can see 600, same 900, 1000, bonus share 2500, right share 600. These are the number of shares we have purchased. So how much is that equal to? That is coming to 5600. Check. So point number C, average cost. Average cost per share. A upon B. A upon B. Take your calculator. 66,500 divided by 5600. So that comes to 11.875. 11.875. This will be very useful for profit calculation now. And this will be useful for closing investment value also. Okay. So step number, working note 4. Profit or loss on sale of investment. Profit or loss on sale of investment. Chaurasia is right. Suyas Watwe is right. Jay Shri is right. Rajendra Pawar right. Sakshi right. Kunal right. Govind Thakur right. Write down date of sale, quantity sold, sale value, cost, and profit or loss. 5 columns only. Go back to your question. In the question, there is a table. Last 2 lines of the table. 20th November, 20th December 16. 1500 quantity was sold at the rate of 22 rupees. Multiply 1500 into 22. 1500 shares were sold at 22 rupees. So I'll take my calculator. 1500 into 22. Haji? Very good. Amazing. Wonderful. 33,000. Sorry, I have written in this column. It should be written here. Okay. Here just write down 1500. Cost write down. Cost will be 1500 into average cost. 11.875. 1500 into 11.875. Okay, so 17,813. Can we do 813? Round off. We can do. With your permission, I have done. Okay, so now tell me profit. Profit is the difference between sale value and cost value. 33,000 minus 17,813. 15,817. Check 15,817 is right. Yes, one more transaction. Last line of the table. 1st February 17. 1st February 17. quantity sold 1000 into 24 rupee. This I will tell you, 24,000. Dang, dang, dang. 24,000. I also know mathematics. 1000 into 24. Cost will be 1000 into 11.875. Which one? 15,187. Okay, 15,187. 15,187, previous one. You are right. Okay, tell me 1000 into 11.875. 11,875 I am getting. So there is some profit I can see. The profit is 12,125. Very good, Thakur. 12,125. Thakur is right. Surya is right. Kunal is right. Any query on this? Yes, no. Last step 4, right? 5, write down. Working note 5. Value of closing investment on 31st March 17. On 31st March 17. First, write down A. Number of shares held. Number of shares held. Number of shares held. How many shares you are holding? Just check. You have, if you see, 600 plus 900 plus 1000 plus 2500 plus 600 minus sold 1500 minus 1000 sold. Come on. How many shares you are holding as on 31/3/2017? Number of share, add 600 plus 900 plus 1000 plus 2500 plus 600 minus sold 3100. 3100 is right. Point B, average cost per share. Average cost will not change because of sale. Cost per share will not change because of sale. Okay. Cost per share will change only when you make new purchases. So value, therefore valuation A into B, multiply 3100 into 11.875, 3681, 36813. Can I make it 36813? Round off. 36812 is also okay. 36812 is also okay. Please note the answer. These are the 5 working notes I will require. Now we are ready to solve this wonderful question. Back to main page. This is your main page? Yes, start. Start. 1st January 2016. Question should be in front of you now. You have purchased shares to bank 600 numbers. Multiply 600 into 20, 12,000. Question is there in front of you. Then you purchase 15th March 2016. Another lot purchased to bank 900 shares. Multiply 900 into 25 is 22,500. Wait, is this two entry right? But now there will be an year ending date. So on 31st March 16 you write down buy balance carried down. Buy balance carried down. There is no sale, there is no dividend, there is no right share in the first year. So close it, just take the total 1500 number and 34,500 amount. First year was simple. This is your year 1 over. Now write down 1416 to balance brought down. To balance brought down. Same thing copy 1500. Very important question. 10 mark question in the exam, May 18. Actual exam question of Inter. Now come back to your question. You will find on 20th April, May, 20th May 16 to bank. To bank number write down 1000. Purchased at 23. So write 23,000. Then you have 25th July. Two bonus shares write down. Only number column, amount column will be 0. 2500. Amount 0. Just to keep a check on number of share. Just to keep a check on number of shares. After bonus share, wait. Do not pass entry for sale, wait. If you read adjustment number 1 below, 15 September 2016, buy bank, dividend received. And we have prepared a working note number 2 for that purpose. Right share entry will come. First dividend, then right share. Go by the dates. So dividend received on the screen, working note 2. Left side, 3,000 rupees is out of pre-acquisition profit. So that will credit investment account, and 4,500 is income that will credit to income account. So you will write down on the credit side, dividend received, amount column 3,000 and income column 4,500. Income column 4,500. Now again come to debit side. Debit side you see adjustment number 2, 12th November 16 to bank. To bank bracket right shares purchased. Right shares purchased. You have purchased right share in working note 1. 600 right shares were purchased. Working note 1 at 12,000 rupees. At 12,000 rupees. At 12,000 rupees. But at the same time, on the same date, you have sold the rights also. Let us go to working note 1 and check below. On the screen, left side, sale proceed of right, entry, bank account debit to P&L account, which means income column. Income column means P&L account. So I will write on the credit side by bank. Income column means P&L account column, and that is 1200 rupees. In bracket right here, sale proceeds of, right, working note 1. Working note 1. Then you write down, now we'll write the entry for sale. There are two sale transactions. One is on 20th December 16, buy bank, sale. You have 1500 units sold at 22 rupees, that is 33,000. And on the sale, you have profit also. So 20th December 16, on sale to P&L account, there is a profit. Working note 4. Let me check profit on first sale. On the screen at the top right hand side, can you see 15187? Yes, write down 15187. 15187. 15187 in amount column, then it will tally. Don't write in income column, amount column, because it will tally accordingly. One more sale took place. 1st February 17, buy bank, sale 1000 unit into 24,000. Debit side 1st February 17 to P&L account. Working note 4 again. Go to working note 4 and tell me how much was profit on this second one. I will show you. 12125, this one. Is it there? 12125? Everybody please focus. I am trying to solve a very important problem for you. 12125, working note 4. And now you write down on the credit side, 31st March 17, buy balance carried down. Thanga Lakshmi Surya, right. Buy balance carried down in numbers column 3100. For amount column, go to working note 5, where we have calculated closing investment value. Yes or no? Let me check how much is that. You can also check and tell me. 36813. Is it there? 36813? Say yes. 36813, working note 5. Right here, 36813. And now we will close an income column. How will you close income column? By writing to P&L account 4500 plus 1200. 5700. 5700. This answer is over. Just tell me the total of all these columns. Number column 5600, is it tallying? Number column. Most importantly, please tally the amount column. Take your calculator. Add these numbers. Take your calculator, add these numbers. Amount column total on the debit side. Anyone? Amount column total on the debit side. 96,000. You're right. 96 how much? 812. 96,812. 96,812. And check on the credit side also. Check on the credit side also, the highlighted figures. Any answer? Approximately same? 96,813, but make it 2 and make this 2. Yes, this make this closing balance 2. And this income column is 5700. Income column 5700. Which means, to summarize, dividend income, sale of rights, and profit on sale of investment, these items will go to profit and loss account. Yes or no? So can I make a small profit and loss account extract? Yes. Write down at the end of the answer. Please write down at the end of the answer. Profit and loss account extract. Profit and loss account extract. Write down at the end of the answer. P&L account will have following entries. One is by dividend income. Which dividend income will be transferred? 3,000 or 4,500? 4,500 is right. By sale of rights, 1,200 rupees. And by profit on sale of investments. So you have made two profits. 15,187 plus 12, how much was that? 125. 125. Add 15,187 plus 12,125. 27,312. So this is the income from investment in your P&L account. Don't take total. It is only an extract of which year? 2016-17. 2016-17, this is the answer. Any query now? Yes, come on, query. Any query. If you have no query, write a note. If you have no query, write a note. Dividend is paid to that shareholder. Dividend is paid to that shareholder whose name appears in register of members on record date. Hence, Mr. Vijay will receive dividend on 1,000 shares which he purchased on 20th May 2016, which he purchased on 20th May 2016. So Mr. Vijay will receive the dividend. And one more thing write down, because some student had a doubt. These shares were in existence in the books of the company. In the books of the company as on 31st March 2016. These shares were in existence in the books of the company as on 31st March 2016. I hope all doubts are resolved. This answer is over. Any query? No. Then why are you waiting? Why don't we go to the next question, number 17 in your book? One more question we will take today. Question number 17. Okay, good news. Today we'll take only one more question and then we can disperse after this. Happy? So send me one happy smiley. This is one more question for today. Sunday would be holiday. We will meet on Monday at the same time, but come to question number 17. A small question will take 20 minutes maximum. On 1/4/2010, question is printed in the notes. On 1/4/2010, Sundar, Washington Sundar. Okay, Sundar had 25,000 equity share of X Limited. This is opening balance. This is opening balance. At a book value of rupees 15 per share. So he has purchased for 15 rupees. Face value is 10 rupees. Face value is 10 rupees. Okay, wonderful. All of you are smiling. On 20th June, underline 2020, 2010, he purchased another 5,000 share. Question is similar to previous problem, but this time they have given in a form of a paragraph. So first opening balance we have 25,000 share at 15 rupees. Then another 5,000 purchase at 16 rupees. The directors of X Limited announced a bonus and right issue. The terms are as follows. Bonus share will be issued in the ratio of 1:6 and it will be issued on 16th August. Number of bonus share will be 1/6 into 25,000 share opening balance and 5,000 share purchased this year. So tell me how many bonus share will be received? How many bonus share will be received by Mr. Sundar? On the screen I have written calculation. How many bonus share will be received? 25,000 plus 5,000 into 1/6. So that is 30,000 divided by 6. 5,000 shares. You are right. 5,000 shares will be received. So while solving the question, we have to keep in mind 5,000 bonus share will be received. 1:6 means 1 bonus share for 6 existing share. So if you have 30,000 existing share, question mark, how many bonus share will be received? Then one more similar adjustment, right basis. Right ratio is 3:7. 3:7 means 3/7 into how many shares we are holding before right issue? How many shares we are holding before right issue? This 25, this 5, and this bonus also 5. So we are holding 35,000 share. So therefore 3/7 into 35,000 is how much? Anyone? 3/7 into 35,000. So I think you are getting 15,000. 15,000 rights will be received. 15,000 rights. And what is the price you have to pay? 15 rupees per share. You are given time to decide up to 30th September. In how many days you have to decide? After the announcement, you are given 1 month time to decide whether you want to purchase or not. Shareholders can transfer their right in full or in part. If you want to exercise your right, you can. If you want to transfer your right, you can do either fully or partly. Accordingly, Sundar sold 33 1/3% of his entitlement. Sold means 15,000 into 1/3, 5,000 rights sold at the rate of rupees 2 per share. So what is the amount received on sale of right? 10,000. Amount realized by selling the right 10,000. Total right received 15,000. Rights sold 5,000. What happened to the remaining rights? What happened to the remaining rights? This question has a serious problem. They have not mentioned what happened to the remaining rights. Previous problem had mentioned. So what we will assume? What we will assume? Assume other rights were exercised by Sundar. Can we assume that? Assume that remaining rights were exercised by Sundar. So 10,000 shares will be purchased by Sundar. 15,000 is total right. 5,000 sold. So 10,000 right share purchased. 10,000 right share will be purchased. One more adjustment similar to the previous one. Dividend. Dividend for underline, double underline, highlight. Dividend for year ended 31st March 10. We are in which year? 10-11. Dividend relates to which year? Previous year. Previous year 25,000 shares you were already holding. 5,000 shares you purchased in this year, which was not held by Sundar on 31st March, but is held by Sundar on record date. So on this 5,000 share also, Sundar will receive dividend because they were outstanding in the books of the company on 31st March. It was held by other investor. Sundar purchased it from other investor. So total number of share on which dividend will be received is 25,000 plus 5,000, 60,000, 30,000 share. On 25,000 dividend received is out of post acquisition profit. On 5,000 share dividend received will be out of pre-acquisition profit because he purchased the share in current year. Dividend relates to previous year. What about bonus and right? On bonus and right, company will not pay dividend only because bonus and right share did not exist in the books of the company on 31st March 2010. Bonus and right shares were issued in current year. Dividend is paid out of profits of previous year. On 31st March 10, bonus share and right share did not exist. What is the rate of dividend? 20%. 20% means 20% of what? 20% of face value. So dividend per share will be, anybody, what will be DPS? 20% of 10, 2 rupees. Dividend were received by Sundar on 31st December. Then the institute is very kind. It is saying dividend for share acquired by him on 20th June. This share which he had purchased will be adjusted against the cost of purchase. So the institute is giving you a hint that, dear student, you will credit dividend received on 5,000 share to investment account. What more do you want? How much kindness can you expect from an institute? not more than this. Okay. Okay, so please come to next line. On 15 November, Sundar sold 25,000 share at a premium of rupees 5 per share. Premium of rupees 5 per share means the selling price is 15 rupees per share. The selling price is 15, 10 rupee face value, 5 rupees more than face value. So the selling price is rupees 15 per share. Sales took place after all these transactions. Yes or no? Sale took place after purchase, bonus, right, dividend. So my life is easy. If sale would have taken somewhere in between, then my average cost calculation will have to be done twice. Yes or no? Yes. We will take one question where sale takes place between two purchase. Then my calculation will be done twice. That will happen in the next lecture. Prepare investment account, P&L account. Prepare investment account and P&L account. So pre and post dividend I have not yet explained. Don't worry, we will explain again. For your exercise, assume that books are closed on 31st December. Shares are valued at average cost. For understanding purpose, I am going to explain something to you again. And this is the last time I am going to explain. So please pay attention. Same matter cannot be discussed in every problem. We have to upgrade ourselves. Otherwise, we will not be able to learn the new thing. This is not a first standard classroom. Every day A for apple, B for boy. Every day in intermediate, I have to learn new thing. So for one more time, keeping question number 17 in front of you, 1/4/2010, Sundar is holding 25,000 shares. Do you agree? Shares held by Sundar, do you agree? Then on which date? 20th June 10, Sundar purchased 5,000 shares. Sundar purchased 5,000 shares. Sundar purchased on 20th June, but these shares were outstanding in the books of company or not? Say yes or no. It was held by some other investor. Let us say the other investor is Kunal. So Sundar purchased from Kunal, but in the books of the company, these 5,000 shares are there. This is not share issued by the company. This is the share purchased by one shareholder from the another shareholder. Oh, oh, 5,000 share was there in the books of the company. Suppose this is 31st March. Okay, this is 31st March 10. These shares, this 5,000 share will exist in the books of company, books of the entity which have issued shares, books of company. Sundar was not holding, someone else was holding. Someone else was holding, and then the company declared dividend. Only dividend date you tell me. Dividend was declared by company on 31st October 2010. On 31st October 2010, Sundar's name, Sundar's name will appear in register of member. I hope this is clear now. Sundar's name will appear in register of member. So who will receive dividend here? Sundar will receive dividend. Sundar will receive dividend. Sundar will receive dividend on which share? This 25,000 share as well as 5,000 share. So he will receive dividend on both the share. But there is a problem. Dividend is paid for year ended 31st March 10. Dividend is paid for year ended 31st March 2010. Sundar was not the shareholder of these 5,000 share on 31st March 10. Sundar became shareholder at a later date. So he must be happy that I am getting dividend from the profit of 2016 when I was not a shareholder. Is it right? So the standard says such dividends are dividend out of pre-acquisition profit and should be credited to investment account. To help you, the institute have also written here in the last line on the screen, dividend for shares acquired by him on 20th June are to be adjusted against the cost of purchase, which means the problem is 100% clear. Sundar has received dividend on 5,000 share out of pre-acquisition profit. Okay. So I hope now your doubt is clear. Kindly draw format. We have only 10 minutes left now. Books of Mr. Sundar. This question won't take much time because now our doubts are cleared. Only writing part is pending. Investment account, investment account for the period from 1/4/10, only 10 minutes. Continue. This is one more very important question. You will find many recent exam questions are of this type. Okay. The year ending date they have mentioned in the last line of the problem. They have mentioned 31/12/10, so I will also take the same date. Security is equity shares in X Limited. Securities equity shares in X Limited. And face value is rupees 10. Face value is rupees 10. So please draw the format first. If you don't want to write this face value column, then you can ignore it. I will give you permission. But you should draw other columns. Date, particulars, numbers, amount, income. Date, particulars, numbers, amount, income. Draw 25 lines. Draw 25 lines. 5 minutes more and then we are almost done for the day and you can enjoy your weekend. Done. Most of the students are saying done. So what I'll do, I will draw one more format, profit and loss account extract, because they have asked in the question. This time specifically asked. This time specifically asked. Then we will write down working note 1, 2, 3, 4, 5. Okay. Is everybody ready? Working note 1, right entitlements. Right entitlements. Right hand side amount. A, number of rights received. 3 by 7 into 35,000. 3 by 7 into 35,000. 15,000? Correct. B, number of rights sold. 1/3 of 15,000. 5,000. C, sale proceeds of rights. Sale proceeds of rights. Sale proceeds of right at the rate of rupees to 10,000. 10,000, right? Write down. Point number D. Rights, number of rights shares purchased. Number of rights shares purchased. 10,000. 15,000 minus 5,000 sold. And last line E, amount paid for right shares. Amount paid for right share, keep writing 10,000 into what is the price for right share? Price for right share is 15 rupees. So 1,50,000. Price for right share. The price for right share is 1,50,000. This is the working note on right entitlement. Now write down working note number 2, dividend. First write down total dividend received. Total dividend will be received on 25,000 plus 5,000 share purchased on 20th June plus 5,000 shares purchased on 20th June because these shares were purchased from the market multiplied by rupees 2, so that is 60,000. First is dividend out of pre-acquisition profit. So here I will write 5,000 shares purchased on 20th June into 2 rupees is 10,000 and dividend on 25,000 shares is 50,000. This dividend on 5,000 will be credited to investment account. Will be credited to investment account and this 50,000 will be credited to P&L account. Yes or no? Yes. Working note number 3. What should be working note number 3? What should be? Check in your previous answer what was working note 1. It was about right share. Then it was about dividend. Yes or no? So what is next working note? Average cost per share? Very good. Average cost per share. Average cost per share. So we have to first take the total of cost. First write down 1 opening balance. Opening balance we have 25,000 share into 15. Check in your question book, 25,000 into 15. Is it, how much is that? 25,000 into 15 is how much? 3 lakh, 3,75,000. Then 2 purchased on 20th June. Purchased on 20th June 2010. 5,000 shares were purchased at 16 rupees. That is 80,000. Then 3 bonus shares. 5,000 bonus shares will be received, but price is 0. Cost is 0. 5,000 into 0. And one more thing, you have purchased right share. Right shares, you can check in working note 1. You can check in working note 1, 10,000 shares at 15. So that is your 1,50,000. Give me this total, 3,75,000 plus 80,000. Is it 6,05,000? 6,05,000. 6,05,000, write down. But there is one adjustment here. Less dividend out of pre-acquisition profit. That is working note 2. Working note 2, check dividend out of pre-acquisition profit below. Can you see this 10,000 rupees? Yes, deduct. Yes, write down. This is an important 16 mark question. This question was asked for 16, 1 6, 10,000. Is it 10,000? So now you get the net cost of acquisition. So tell me net cost, 5,95,000. Noted? 5,95,000. And point number B is number of shares. Number of share will be opening balance 25,000. This one. Purchase 5,000 plus bonus share 5,000 plus right share 10,000. So this is 25 plus 5, 30 plus 5, 35 and 10. 45,000 shares. So we have 45,000 share at a total cost of 5,95,000. So point C, write down average cost per share. Average cost per share will be A divided by B. Take 5,95,000 divide by 45,000. 13.2222. 13.2222. Is this average cost per share right? Noted? Show me. So that is my average cost per share. Now Next thing I need to calculate is profit or loss on sale of shares. Profit or loss on sale of shares. Right hand side rupees. First you tell me a sale value. Look at the last four lines of the question. Sundar sold 25,000 shares. Sundar sold 25,000 share at a premium of rupees 5 per share. Premium of 5 per share means 15. So he sold for 3,75,000. And point B, cost. Cost is 25,000 shares into 13.22. 22. Come on. Multiply. 25,000 into 13.2222 is equal to, so that roughly comes to 3,30,555. 330,555, which means there is a profit minus, so profit comes to 4,4,4,4,5. And then last step, working note 5, write down. Valuation of closing investment. Valuation of closing investment. Valuation of closing investment. Right hand side amount. A, number of shares held on 31st December 2010. Number of shares held on 31st December 2010. You have opening 25,000 plus 5,000 purchased plus 5,000 bonus share plus 10,000 right share minus 25,000 sold. Minus 25,000 sold. So the number of share you are holding is 20,000. 20,000 shares. B, average cost per share is 13.2222. This has come from working note 3. Therefore, valuation. Therefore, valuation is 20,000 into 13.2222 equal to how much? Is equal to 2, 6. As if Surya Kumar Yadav is batting 6, 4, 4, 4, 4. Okay. Round off, you can write 264440 also. Surya is right. So now we are ready to complete the answer. All working notes are ready. Has everybody completed the working notes? Whatever explanation and notes I have dictated in the previous question is applicable for this question also. So I will not repeat. Okay. Note: all notes dictated in previous question are applicable to this question also. All notes dictated in previous question are applicable to this question also. So you will, as a homework, copy those notes. So just give me 2 minutes now and we are almost done. Trust me, we are able to complete in 2 minutes now. Question is in front of you. 1 4 10 to balance brought down face value column I will not write. 25,000 share into 15 into 15, 3,75,000. Chapter is not over. One more or at least half lecture more will be required. So that will take on Monday and then a new chapter will start. Next transaction is on 20th June. 20th June, we have to write down to bank. 5,000 shares were purchased at the rate of 16. Make it 80,000. Then on 16th August 10, bonus shares were received. 2 bonus shares. 1 by 6 into 30,000 shares. Which 30,000? This 525 and this 5, total 30. So 5,000 bonus share, cost is 0. Then in the next paragraph, the right shares. Last due date of payment is 30th September. So 30th September 10 to bank, in bracket right shares. 10,000 right shares were purchased. 10,000 right shares were purchased and the amount is 10,000 into 15, 1,50,000. The amount is 1,50,000 and on the same date you can write 30th September 10. You have sold some rights also. So buy bank, sale of rights. Sale of rights, working note 1. If you go to working note 1, you have sold some rights on the screen below, 10,000 rupees here. Can you see 10,000 rupees? Sale of rights 10,000. Then next is dividend. Dividend was received on 31st October. Dividend was received on 31st October by bank, dividend. Working note 2. Working note 2. In working note 2, you will find dividend out of pre-acquisition profit on the screen below 10,000 and post is 50,000. Correct? So what I'll do, 10,000 in investment column and 50,000 in income column and 50,000 in income column. Last 4 line of the question. 15th November 10, buy bank, sale. 25,000 shares were sold. 25,000 shares were sold at 15 rupees. So that is 3,75,000. And on the same date, there is a profit also. On the screen, working note 4 profit is 44,445. Yes or no? So on the debit side, write down same date, same line, 15 November 10 to P&L account 44,445. This is working note 4. Profit on sale. Profit on sale. And now you write down here 31st December 10, buy balance carried down. Buy balance carried down. Numbers will be 20,000. Amount will be 2 lakh. So not 2 lakh. We have to go to working note. Working note number 5. On the screen below right side. 2, 6, 4, 4, 4, 4. So write down buy balance carried down. 2, 6, 4, 4, 4, 4. Okay. And then you write here 31st December 10 to P&L account. This income item 10 and 50, 60,000 you transfer to P&L account. Now we'll just check the totals are matching or not. So please help me with the number column. Total of number column 25 plus 5 plus 5 plus 10. Very good. 45,045 is tallying. Important thing is this amount column should tally. Amount column 3,75,000. Yes, come on. Please tell me amount side total. Everybody. Everyone will try. If you give correct answer, today you will get early leave. 649, 445. This is what I am getting. 649, 445. And on the credit side also, let me check. Yes. 649, 445. If it is not telling, then you change the carrying amount by 1 rupee. And this is 60,000. Yes, 649, 445, Kunal, Kirti, Thanga, Lakshmi, Surya, Sakshi, Jayashri, Sankit, all of you are right. One small thing we have to do is to prepare P&L account by dividend. Working note 2, only 50,000 rupees. Post acquisition dividend will be credited to P&L account. By sale of rights 10,000. You can say working note 1. By profit on sale of investment. By profit on sale of investment, this figure 44445. So these are the various incomes. These are the various incomes from dealing in this investment. So that is the advantage of preparing investment accounting. All notes that I have dictated in the previous question, you are going to copy at the end. Note on dividend, note on rights, okay, note on record date. All those notes the student will write. So today we will stop here. Thank you very much. Enjoy your weekend. All the best. Bye bye.